Good afternoon and welcome to our weekly livestock market update. I'm Brownfield news anchor reporter Meghan. With us this week to talk a little bit about those livestock markets is Scott Brown with the University of Missouri. Good afternoon, Scott.
Good afternoon, Meghan.
All right, first things first, let's get into that cattle on feed report, because for the first time in several weeks, we get to start our weekly recap on a positive note.
That's right. It's nice to have some positive news to talk about for a change, Meghan. It's been a while since we've been there. We did get cattle on feed out this afternoon. When you look at the numbers for me, cattle placements in September, pre-report, we were talking about being up 103.3% relative to a year ago. And when we got the numbers, we're actually down, so down 1.9%. I think that's some good news that cattle markets in particular, have been looking for. That came very close to the bottom end of the range of pre-report guesses as well. On feed, October 1st of this year, setting now at 100.4 relative to a year ago. The average guess pre-report was 101.1, so we came in below the pre-report there as well. And so all in all, I think very good news in terms of cattle placements that we've been waiting to see for a while.
One of the figures we saw, and we need to look at, is that breeding herd number. What does that indicate, and what implications does it have on the beef industry?
Yeah, absolutely. When you look at some of the heifers on feed numbers that we got, so that number is actually up 4.4% relative to a year ago. It continues to confirm to me that producers are out there saying we don't want to be building cow inventories any further given the current price situation that we're in. So that has some better longer-term implications as well. We may have slowed this uptrend in cow numbers a little bit. We'll have to wait and see what we get out of the cattle report next January. But I believe we're in a situation where maybe we've slowed things down a lot. And again, I don't think we're going to stop cow growth come January 1 of 17, but perhaps we're really getting producers to rethink those strategies about growing cow inventories, and the data from cattle on feed suggests we're feeding those heifers and not breeding them.
Scott, one of the other reports that we need to talk a little bit about too is cold storage numbers. We have the positive news from that cattle on feed report, but that report isn't necessarily good news for beef and pork producers either.
Yeah, that's correct. If you look at total red meat, about 1.2 billion pounds of red meat as of September out of the report we got on cold storage today. Both beef and pork higher, but when you look at beef, we grew about 40 million pounds from the previous month, and getting much higher levels of beef ending stocks in cold storage here. Likewise, pork up as we look at August to September. The September numbers for pork are still below year-ago levels, but it makes you wonder as we get in these last few months of 2016, and we know we're going to have big hog runs, whether or not we continue to see pork back up in the freezers as we get here to the end of the year. So I believe when you look at that 1.2 billion, it's at or near record for September in terms of cold storage of red meat. So we have product to work through here in the short term.
Scott, let's talk about when we look at those cold storage numbers, are we concerned about the downward pressure and the negative implications it has for beef and pork producers in the long run?
Yeah, so you have to have some concern because we're going to get that hang on markets. It's one thing to talk about we have placements down. It's far another, though, that knowing that we're sitting here with larger stocks of beef and pork in cold storage, as soon as we get any kind of more positive news on the price side from a wholesale standpoint, you probably know we're going to see some of those stocks get back on the marketplace, and that may tend to buffer kind of what we do longer term in terms of price recovery. So there are some issues there in terms of what it means for producer prices as we look ahead.
Scott, you mentioned some pretty big, as we get towards the end of 2016, some pretty big hog runs, and that certainly was the case this week. How much of that comes from the shutdown in the Smithfield plants from Hurricane Matthew, and what does that mean long term for us?
Yeah, well, when you look at the numbers that we have, it looks like we hit a record slaughter this week for hogs. And I will say a lot of that has to do with Hurricane Matthew effects, I believe, as we're trying to catch up from a short week the previous week. But it just tells me that we have a lot of reasons to be worried as we end here in 2016. And it's tough for us as economists to sit here and go, well, when's it become a real problem? But we're running larger slaughter numbers already than we might have anticipated. And it just tells me that the pressure is only growing for us to get in a bad situation these last couple of months of 2016. And as we remember from these other periods of time, once we run out of shackle space, that's when we really lose prices. And that day when we run out of shackle space, trying to guess that gets pretty tough. And I remind us all the time, we can move hogs around week to week here a little bit, but when we run week after week after week where we're just full, I worry about what downside pressure that puts on prices. It could be very tough for folks here in the last few weeks of 2016.
What about the input side of things, Scott? Are we looking at corn and soybean prices? We talked about that protecting us a little bit and maybe mitigating some of that downside risk. Are we still seeing that those numbers there?
Well, I think when we look at corn prices for the week, we've been fairly flat. I do think, as I hear anecdotally, there's a lot of corn sitting out here around the countryside. So it tells me that feed costs are still going to be moderate for us. Hopefully we're getting in a situation where what's been pretty severe declines in cattle and hog prices of late, perhaps we're finding that bottom a little bit better, and we don't continue to fall into the cellar like we have been of late. But feed is going to be the helpful side of this. I think now you're going to see us start to turn our attention to what happens in South America and what we get out of that crop. And it's, early in their season, but I have a hunch that if they get a decent crop out come next spring, that there'll be more pressure on feed prices.
Let's talk a little bit too about the retail side of things, Scott. We've touched on that in weeks past. Where are they going, and how does that, and how could that maybe impact beef and pork prices?
Yeah, so I guess I come at it two ways. Number one, we are lower in terms of many of those retail meat prices. We got data out this week that would say for September, retail prices for ground beef down a little over 6% relative to where we were a couple of years ago. If you look on the pork side, boneless pork chops down 10% relative to where we were a couple of years ago. Those do translate into lower prices for farmers, no question about it. And yes, in percentage terms, farm prices have fallen a lot more than retail prices. But I hope that we can start to talk about increased consumption. And I think, as we have larger cold storage stocks to deal with, as we continue to have large pork and beef runs on a weekly basis, we need more consumers in this country to increase consumption of beef and pork products. So lower prices ought to help us on that front. Now, the other interesting thing to me is when you look at some of the individual price data, we've talked about this a time or two, but boneless choice sirloin steak, which you may not think is the top of the list, but one of BLS's cuts that they do track is up 4.3% relative to a couple of years ago. It tells me that perhaps some of those cuts that are at the higher quality end have fared better than some of the lower valued products that we talk about. So maybe demand from those with more income has been stronger than the demand we get from some of the lower income classes here in this country.
You talk about increasing consumption domestically. What about exports, and how does that play a role in that equation as well?
Yeah, I think with the jump that we saw in cattle futures this week, it's, again, nice to not to be talking about another week of lower cattle futures, but the jump that we got certainly might have been helped by some of the weekly export data that we had. I think when you look at both what beef and pork showed on a weekly basis relative to the previous 4 weeks, we were up substantially. And in fact, I believe beef was up about 27% relative to the previous 4 weeks. So, maybe we have some help coming on the export side. I say that, and I'm a little worried about what I see on the exchange rate side. The dollar's been trying to strengthen a little bit on us. If that were to continue to happen here for the remainder of the year, that might slow some of the growth that we see. But given what we're producing today, we need both domestic and international consumers to want more of our product, not less, as we move ahead.
Scott, anything else this week?
I think that's it. It's just nice, Megan, to be able to talk about at least flat to higher prices for cattle and hogs this week, and it's been a number of weeks since we've had that opportunity. So hopefully we can grow from this bottom.
I'll take any good news any day of the week. Good to see you.
Good to see you as well, Megan.
Just a reminder, if you have questions for Scott and myself for our Friday afternoons, you can submit them online. Go to brownfieldagnews.com. And to have our weekly livestock market update delivered directly to your inbox for Saturday mornings, you can click subscribe as well. I'm Megan Grebner on Brownfield.